What's up everyone? Welcome to Wisewealth, where we dive into all things personal finance. Today we're bringing you episode 3 of our Stock of the Week series. In Stock of the Week, we pick a stock for any host of reasons. It may have been in the news recently, a recent earnings report may have been published, or anything else, and we break it down in a video for you. We'll take a look at any recent events that may affect the stock, what its performance has been like, and what we think it will be in the near future. The analysis will go into the financials, what it's trading at, and ultimately, do we think it's a good investment at this point in time? At the end of the analysis, we'll rate the stock out of 10 to give you an idea of it in a quick and easy to understand video, and I hope that it helps you with your own investment decisions. Now, I must caveat this by saying that this is not financial advice and is purely my own thoughts on the stock and intended for educational purposes. I'd always advise doing your own due diligence before investing your own money. So welcome to episode 3. I usually try and release these videos on a Monday morning, but this particular stock has gone all over the place this week, and I thought that it would be useful to share some info on it over the weekend so that you're aware of it going into next week. If you've seen my other videos, you'll know that this is a relatively new channel. We started this series recently and we've been receiving a lot of positive news from it, so thanks for that. And I hope that this episode will provide you guys with some value. If you're new here, then welcome to the channel. If you're looking for content about stock market investing and personal finance, be sure to subscribe to my channel and hit that bell icon to get notified when I upload new content. Without further ado, let's get into today's video. So in today's episode of Stock of the Week, we'll be looking at BT Group. For those of you who don't know, BT Group plc is a communication services company engaged in selling television products and services, as well as communication services ranging from phone and broadband to managed network IT solutions and cybersecurity protection. They're listed on the FTSE 100 on the London Stock Exchange, and as of this video, they are currently trading at 105 pence. Their share price has been quite volatile recently. I chose BT because if you've been paying attention to the news, you'll know that BT have suspended their dividend for the remainder of the year and have also set expectations with investors that the base dividend payout is going to be reset going into 2021. This news was both unfortunate and somewhat surprising to investors that rely on BT for dividend income. As you would expect, BT's industry would be one of the few that would withstand the effects of the pandemic fairly well. Instead, they have joined many other firms on the FTSE 100 in suspending dividends, which has caused a huge sell-off of the stock. The stock didn't actually record any movements until minutes after trading began, as there were so many transactions to be recorded for sell-offs. This resulted in an immediate drop of around 11% on the day. This video will analyse the fundamentals in more detail and the performance of BT over the last few years. Has BT been oversold too much this week? Is the current price somewhat of a bargain, or is it justified? So first off, looking at performance, how has the firm performed over the last few years? Well, as you can see, here are the revenues and operating profits over the last few years. As you can see, there was a sharp rise in revenue in 2017, but there's been a steady decline since then. The operating profits, however, have grown consistently. This gives BT more room for reinvestment of capital and to pay out to their shareholders in dividends. Funnily enough, with recorded profits at the end of Q1 2020, this is when BT actually decided to suspend their dividend. We can also see that the PE ratio has declined to a point where, in 2020, we can see a ratio of 5. This usually low ratio in normal circumstances has become somewhat of a regular among many stocks, with valuations tumbling across the board. From the news of the dividend suspension, BT's share value dropped approximately 11% and rebounded on the day to record a daily loss of approximately 9.5%, with many investors who relied on this as an income stream looking to invest elsewhere for higher returns. If you actually calculate the estimated loss in value from the sell-off, you'll find that it's actually greater than the expected dividend. So any new investors moving in at the current value would get more for their investment from looking at it that way. To put the extent of the sell-off into perspective, The 52-week low that was recorded on the 17th of March when the big stock market crash happened was recorded at 101 pence. We're not far off that number here. Some sellers quickly cashed in on their investments, suggesting that the stock could test the 90s mark in the week. But that's lower than the value we saw when the market was at its very lowest. Have we seen the bottom of BT's share value, and is the only way up? It's not unheard of to see huge sell-offs when a firm announces dividend suspensions. We've seen plenty of historical examples of that in the recent months. The question is, how will the market react when we resume on Monday? Will investors see BT as an undervalued stock? Moving on to dividend analysis, what does the dividend usually look like for BT? As you can see on the right, here is the annual dividend history for the last few years. As you can see, the suspension of the dividend relates only to the final dividend, as the interim dividend for 2020 was declared at the end of last year. This gives BT a dividend yield of 3.9%. While this isn't low by any means, this is aided by BT's plummet in share value, and it comes nowhere near to what investors of the stock are used to. As per the announcement, investors can also expect the 2021 dividend to be set from a lower base. So we can say with a lot of confidence that both the final and interim dividend payouts in 2021 will be lower than the ones listed here. Historically, BT is one of the largest dividend payers in the FTSE 100 and last passed on making a payout in 2001. The last dividend cut was in 2008 when the financial crisis caused major problems. The move to suspend the dividend this year was more severe than most anticipated. A lot of BT's recurring revenue would be maintained throughout the crisis, as consumers and corporations need connectivity more than ever, with many firms attempting to continue to operate from a decentralized location. Networks have been under strain from the increased traffic that has come from many people working from home and staying indoors. So why has the firm suspended the dividend? Jan du Plessis, the BT chairman, said, BT plays a key role in sustaining critical national infrastructure, as magnified by the crisis, and many stakeholders trust and rely on the connectivity we provide. Absolutely, that makes perfect sense. Many stakeholders have relied on the connectivity BT's provided before the crisis, and more importantly now. So what has changed? He went on to further explain that suspending the dividend was needed to navigate the unprecedented uncertainties caused by the pandemic without compromising our credit rating. Once again, this idea of uncertainty that has risen over the last couple of months has led to investors missing out on their payments. If you watched my analysis of Shell earlier in the week, you'll know that the cutting of their dividend was justified due to the crisis of uncertainty that the Shell CEO described we're in. If you want to watch that video, I'll leave a link to that in the description below, or click on the top right hand corner. So what are my overall thoughts? Well, I think BT is in somewhat of a strange position. The firm that was known as a strong dividend investment on the FTSE 100 has damaged that reputation by suspending their dividends when the industry they operate in hasn't been affected nearly as much as others. The rapid fall in share value suggests that a large portion of BT's investors were only invested in them for the regular dividend payments to begin with. Now that has been taken away from them, many don't see BT as an attractive prospect. I do, however, think that the sell-off was greater than expected. We saw this with Shell when they announced their dividend cut. Their stock fell 7% on the news, and in the days that followed, it rose back to normal levels and has continued to grow. The caveat there is that it was also buoyed by rising oil prices, but there could be something to take from that example. I think that in the short term, BT's value could rebound quite significantly and could pose a way of making quick profits from a firm that is trading at a fraction of the price it was before this. Prior to the dividend suspension, BT's share value had some momentum. It was trending upwards throughout the week, and this announcement has taken the wind out of its sails. It doesn't help that BT has been at the centre of much controversy in the past, with a pension deficit and a hard to justify heavy investment in sports rights, it does not seem that the firm is allocating capital as effectively as it could. For that reason, I'm going to give this stock an average 5 out of 10. BT was an effective dividend investment in the past, but that's no longer the case. If we're investing in BT for capital growth, it may only be for the short term, after it potentially rebounds from the dividend suspension. If we look at BT over the last 5 years, it hasn't done much for capital appreciation. I think the management team need to look at what segments of BT need further investment and others stripping back in order to maximize shareholder value. The coming months and years will be interesting for BT, as they'll be facing a new challenge once they come out of the crisis, with Virgin and O2 set to merge. How will they respond? Is the downward trend of BT share value going to continue long into the future? Only time will tell. I'd be really interested to hear your thoughts on this, so let me know in the comments below. What do you think of the situation surrounding BT at the moment? Do you currently have investments in BT and are thinking of offloading your stock? Were you thinking of opening a position in BT for the dividend income, but have become a bit more hesitant now? Thanks for tuning in today. I hope you enjoyed the video. If you found it useful, smash the like button, I'd really appreciate it. If you want to see more episodes of Stock of the Week, subscribe to my channel and be sure to hit that bell icon to get notified of new posts. I upload all sorts of videos on this channel, not just the Stock of the Week stuff, so if you're interested in investing videos, top fives, and personal finance in general, check out my channel for more, and until next time, see ya.